Hello, everybody. Welcome back. After trading closed and markets around the world had shut down for the weekend, the United States executed a strategic military operation against Venezuela, successfully apprehending the nation's leader, Nicolas Maduro, who is currently being detained in New York City. I'm confident you're already familiar with these developments, as they've been dominating headlines across all major news outlets and social media platforms. However, what might have escaped your attention is the widespread speculation regarding gold and silver's connection to this extraordinary event, with numerous reports and insider whispers suggesting that certain major banking institutions received advance notice about the Venezuelan situation that was about to unfold. Consequently, according to these allegations, they strategically drove down precious metals markets to acquire substantial positions at significantly reduced prices ahead of Monday morning's Asian market opening, when trading resumes, and we might see explosive price movements. Beyond this already controversial claim, there are even more extraordinary assertions from the widely followed Asian AI Guy channel, claiming the entire military operation was fundamentally about silver, representing a calculated attempt to gain control of Venezuela's silver stockpiles for the United States, which supposedly faces urgent needs following China's comprehensive silver export limitations that became effective January 1st this year. These export restrictions have sent shockwaves through industrial sectors that depend heavily on silver for manufacturing. With numerous viewers, including Eleanor and Natalia, who have been loyal followers of this channel, inquiring about future prospects for gold and silver and what investors should be doing right now, I'm devoting this entire video to addressing your concerns through a condensed yet comprehensive examination of how the USA-Venezuela developments should influence gold and silver valuations in the near term. I'll also provide a thorough analysis of the extended-term implications for gold, silver, and additional market sectors while carefully evaluating certain assertions circulating online from various channels, some of which are frankly misleading and could cost you money if you make decisions based on them. Before proceeding with the main content, if you're planning purchases this weekend and want to take advantage of current market conditions, I encourage you to visit summitmetals.com for excellent pricing on gold American Eagles, with random year 1-ounce Eagles presently reduced by $30 below typical market rates, though I must mention that quantities are limited and moving quickly. Act quickly while supplies remain available, because once these discounted Eagles are gone, the next batch will likely be at regular pricing. Additionally, if you're discovering Summit Metals for the first time because you wish to support my YouTube channel and the educational content I produce here, note that first-time customers receive this special 5-ounce silver bundle at spot price, which is an incredible deal that essentially eliminates the premium you'd normally pay. I've included the direct link in the description area below for your convenience, so check that out after watching this video. Moving forward into the meat of today's discussion, despite this being the initial significant geopolitical development we've witnessed in 2026, it's actually something we've grown accustomed to since 2022, and we should realistically anticipate more of these types of events going forward as we transition into the era of what I've termed neo-imperialism. This is a period wherein superpowers, both major nations like the United States and China, as well as minor regional powers, systematically divide the globe to strengthen influence within their geographic spheres of control. These actions aren't merely to secure strategic locations for military positioning, but frequently to obtain direct control of valuable resources within territories they're acquiring, whether that's oil, rare earth minerals, strategic metals, or agricultural land. This makes it, from my analytical perspective, fundamentally a resource conflict disguised as various other justifications. Let me clarify up front that absolutely nothing I'm about to discuss is intended to be political or politically driven in any partisan sense. I'm not here to defend or attack any particular administration, political party, or ideological position. My singular concentration is on preparing financially for what lies ahead, helping you understand market dynamics, and positioning your portfolio to weather whatever storms may come while potentially profiting from the shifts we're seeing. That's what this channel has always been about, and that's what it will continue to be about regardless of who occupies political office. The initial point I need everyone to grasp clearly is that this development can produce a short-lived positive effect on gold and silver valuations, at least in the immediate aftermath. I can say this with some confidence because during each of the previous 4 occasions we witnessed major geopolitical escalation, and I've outlined precisely what those were on screen for your review, including specific dates and contexts, we observed gold and silver values climb with substantial weekly gains during the weeks subsequent to each of these geopolitical developments. Specifically, in 3 of the 4 instances presented, we saw strong upward price momentum, with the sole weekly decline following a major event occurring after the U.S. struck Iranian targets in June 2025, where valuations retreated following a considerable upward spike during early trading hours that week before profit-taking set in. This represents what may occur in the coming days as Asian markets open and European markets follow. However, and this is absolutely critical. What I want to caution everyone about, particularly if you're considering making a near-term easy gain by acquiring gold and silver now because you think it's virtually guaranteed to rise this week, what you must comprehend is that the immediate impact of these developments on gold and silver valuations hasn't been sustainable over time, at minimum over brief timeframes of just a few weeks. Looking at the historical data, we've seen gold and silver prices declining back to equivalent or even lower positions in the weeks subsequent to the initial upward movements in all four of these comparable cases I've analyzed. This pattern leads me to conclude that even if major banks possessed advanced knowledge of this Venezuelan operation, which incidentally has zero concrete evidence supporting those assertions despite what you might read in certain corners of the internet, the transaction for them would probably only be a brief-term transaction where they're attempting to capture modest short-term gains of maybe 5 to 10% before exiting their positions. It's worth noting that these banks have already been systematically shifting their positions from short, meaning betting against precious metals prices and profiting when they fall, to long positions where they're beginning to wager on precious metals, prices appreciating in the latter half of 2025 and into 2026. I discussed that trend extensively in several videos at last year's conclusion, showing the commitment of traders' reports that reveal this repositioning clearly. So they're already positioned for higher prices long term. They don't need this event to make that trade, which casts further doubt on these conspiracy theories about advanced knowledge. That being said, and here's where things get really interesting from an investment standpoint, it's when we expand our view and examine things over extended periods of months and years rather than days and weeks, that the argument for gold and silver becomes significantly more persuasive and compelling. Because with gold already surpassing the US dollar as the primary reserve asset for international central banks based on total holdings, a stunning reversal from just a decade ago, and silver undergoing severe supply constraints globally, which may only intensify dramatically in 2026 because of comprehensive export controls on silver that commenced January 1st this year, implemented by China as part of their broader strategic resource management, we're looking at a fundamentally different market environment. Not only do I anticipate this Venezuelan action will substantially hasten de-dollarization among nations aligned with BRICS, most notably China, obviously, but also Russia, India, Brazil, South Africa, and the expanding list of countries seeking membership. But I also foresee it resulting in a comprehensive restructuring of the worldwide supply chain for essential minerals like silver, copper, lithium, and rare earths, where certain nations will merely choose sides in this new geopolitical alignment and deliberately restrict availability of those minerals for the side they rejected. This creates artificial scarcities in addition to natural supply constraints, leading to the valuations of these minerals, again like silver, which is crucial for solar panels, electronics, and numerous industrial applications, getting substantially bid higher by desperate buyers who need these materials for their manufacturing processes. The critical indicator I'm monitoring most closely in the aftermath of what's just transpired in Venezuela, and it's something I strongly recommend you all monitor independently as well using publicly available data, is central bank gold acquisition rates. Because just as we witnessed a substantial increase in gold reserve acquisitions in 2022 subsequent to the confiscation and freezing of Russian assets by the Biden administration because of the Ukraine invasion, which sparked a significant erosion of confidence in the US dollar as a truly safe reserve asset, another elevation in those gold reserves from this point versus the benchmark we've established since 2022 would only indicate this de-dollarization process is accelerating beyond what many analysts anticipated. Here's a fascinating data point that many people missed. Central banks purchased the greatest amount of gold in 2025 throughout the October price correction, merely 1 month following the initial U.S. airstrikes executed against what were characterized as Venezuelan drug trafficking vessels operating in Caribbean waters. This pattern is one we must monitor carefully and track month by month because the October surge might not have been coincidental at all and might not whatsoever have been driven primarily by the price correction we observed, which made gold temporarily more affordable. It may have been an indication that sophisticated central bank purchasers recognized that gold valuation is about to accelerate in a substantial way very shortly, probably in the initial half of 2026 if this geopolitical trend persists and intensifies. Let me supplement that observation with this projection. If we observe reported central bank gold acquisitions surpass the 2022 and 2023 amounts displayed here on screen despite the record valuation level we're at presently, hovering near all-time highs, I would declare that's an unmistakable indication that the US dollar's reign as the global reserve asset will conclude even earlier than I had anticipated in my previous forecasts. And understand, I'm not saying this because I'm mourning for Nicolas Maduro or his regime, as I'm firmly opposed to socialism and communism from an economic standpoint based on their historical track records. But because other nations, acting from rational self-interest and apprehension about what occurred to Russia in 2022, when hundreds of billions in assets were frozen, and what's just occurred to Venezuela this weekend, with a sovereign leader being apprehended, will respond predictably to diminish their vulnerability to the United States and dollar-denominated assets. This clearly demonstrates that whether Democrats or Republicans hold power in Washington, whether the administration is considered left-wing or right-wing by political commentators, if you end up on the incorrect side of the United States and U.S. strategic objectives, there will be severe consequences that can include asset seizures, sanctions, or apparently even military action. That's not a political judgment. That's simply an observable pattern that other countries are certainly noticing and factoring into their planning. Regarding stories spreading rapidly about this Venezuelan attack being fundamentally concerning silver acquisition, as opposed to concerning oil reserves or establishing supremacy in the Western Hemisphere, let me state clearly and unequivocally that if you accept that narrative and accept everything the Asian AI guy is claiming without critical analysis, then you've unfortunately succumbed to a fake news deception. Because as you observe in the data displayed here, Venezuelan silver stockpiles are absolutely negligible when contrasted with other prominent nations like Mexico, Peru, China, Poland, and Australia that hold vastly larger reserves. Although I comprehend the AI Asian guy videos can appear thrilling and compelling, especially in an atmosphere where silver valuation is achieving new record peaks, and that Asian AI guy is expressing everything you may desire to hear as a silver investor hoping for massive gains, there's substantial misinformation in those videos being strategically integrated with things we already recognize as accurate. This mixing technique makes it appear that the other inaccurate things the AI is claiming are completely factual by association. It's a classic misinformation tactic, whether intentional or not. I simply encourage all of you who've been viewing those videos and accepting every statement the AI is making to practice serious prudence in making financial choices based on what the Asian AI guy claims. Do your own research, verify claims through multiple sources, and think critically about whether assertions make logical sense given what we know about global resource distribution, military strategy, and economic realities. Because if any market is going to be substantially affected by what's just transpired in Venezuela, it will undoubtedly be the oil market, not the silver market. Venezuela sits on some of the world's largest proven oil reserves, making it a genuine strategic prize from an energy security perspective. Although I still believe we'll witness $100 per barrel oil within the following 3 to 5 years based on long-term supply and demand fundamentals, this development has the immediate capability to push oil valuation down to $40, perhaps even $30 per barrel over the near term as U.S. oil corporations invest heavily in and enlarge Venezuelan oil production capacity that has considerably decreased since the early 2000s under Maduro's mismanagement and years of underinvestment in infrastructure. Now, that doesn't indicate all oil equities are going to plummet across the board. In reality, the corporations that engage directly in this production expansion, like Chevron and ExxonMobil and potentially even ConocoPhillips, which is a corporation I'm monitoring very attentively right now for potential entry points, those corporations can perform exceptionally well as a consequence of this situation. They'll be getting access to reserves at favorable terms while potentially benefiting from infrastructure rebuilding contracts. But with an expanding narrative that Canadian oil corporations are positioned to flourish in 2026 and 2027 based on North American energy independence themes, I'm approaching them, the Canadian corporations specifically, with extreme doubt and skepticism. According to detailed oil industry examination on the subject from petroleum engineers and energy analysts, Canadian heavy sour crude oil, which is the specific variety of oil that originates from Canada's oil sands deposits, has been directly replaced for Venezuelan oil in U.S. Gulf Coast refineries with nearly identical processing specifications to the Canadian oil. This means the infrastructure is already set up to handle Venezuelan crude, unlike the variety of oil that originates from Saudi Arabia or even U.S. shale oil, which has a distinct chemical profile entirely requiring different refining processes. So Venezuelan production directly competes with and potentially displaces Canadian imports. Therefore, if you're currently invested in energy sector equities that's acceptable and potentially quite profitable, continue collecting those generous dividend payments, because again, that's part of why I perceive significant value in oil corporations right now. With interest rates declining from their recent peaks, holding those dividend-paying equities is, in my judgment, significantly better than maintaining cash in a money market account or a certificate of deposit that might yield 3 or 4%. But exercise extreme caution with your Canadian holdings specifically and conduct some thorough investigation, because this Venezuelan development may damage those corporations financially, and it may damage them severely through lost market share and reduced pricing power. That stated, while Canadian oil corporations may experience substantial pressure from this geopolitical shift, mining corporations and mining equities should continue performing exceptionally well in this environment. Elevated metals valuations, which I anticipate over an extended term basis as a consequence of what's occurred, combined with potentially reduced oil prices, will render these corporations even more profitable than they are currently, since energy represents a major operational cost for mining operations. Lower diesel and electricity costs directly improve their margins. I recognize it's been an unstable and volatile segment of the market lately with significant price swings in both directions. But this development and the ramifications emerging from it could become the precise trigger that propels all miners upward in a sustained rally, including the junior miners, which have been lagging. When evaluated by the GDXJ, which is the junior miner ETF tracking smaller mining companies, these stocks still require a 47% increase just to equal their 2011 peaks before they potentially surge to new all-time peaks, as gold and silver have already accomplished. That's substantial upside potential if this sector catches fire. I realize this video isn't similar to my standard YouTube videos in format and structure, but I wanted to summarize and consolidate everything that is transpiring between the US and Venezuela presently in one comprehensive video for you all to grasp the forecast for metals advancing, the forecast for miners advancing, and the energy sector implications. Both precious metals and miners are undoubtedly bullish, not merely for 2026, but progressing even into 2027 and beyond as these geopolitical trends continue developing. As for the energy equities, which I've referenced previously, this actually depicts a somewhat grimmer forecast specifically for those Canadian energy equities, but a potentially favorable forecast for American equities like Chevron, Exxon, and ConocoPhillips that can capitalize on Venezuelan opportunities. With that concluded, I would genuinely appreciate your feedback on this format of video in the comments area below. Did you appreciate this more news-focused and geopolitical analysis style? Did you not appreciate it and prefer my usual content? Please inform me honestly, because your feedback directly shapes what content I create going forward. If you discovered this content beneficial and informative, please distribute this with individuals you know and care about if you believe they need to receive this message and understand these market implications. And naturally, as always, leave a like below if you enjoyed it, because that generates some activity for the algorithm so it recognizes to suggest this video to other individuals who might benefit from this analysis. With that concluded, I'm wishing you all an excellent day and week forthcoming as we navigate these uncertain times together. If you have any inquiries for me that you'd like to observe me address in future videos, please don't hesitate to reach out. Leave them also in the comments area below and I'll do my best to address them in upcoming content. Remember to take care of yourselves both financially and personally, and take care of each other in these challenging times. Once more, all the best in 2026. See you in the following video. Goodbye.